Good morning, everyone. It's Monday and time to get back after this market. This is Doug Campbell with Right Way Options and the morning market preparation video for September 23rd, 2017. Well, hey, I hope everyone had an awesome weekend and we're ready to get back after this market. We sure have the bulls in control, and it looks like they want to stay in control, at least for the morning here. Futures are currently pointing to a gap up of about 20 points on the Dow. You can see that would be right about there, just a new record high open on the market. We can also see that the market is just pretty darn overextended here on the diamonds chart. And we have to temper ourselves. We don't want to be predicting bearishness. But what we do want to do is temper ourselves a little bit and realize that a rollover could happen at any time. Now, I personally, and I think most of the members are in really good shape, we took profits on Friday and got out of quite a few trades so that we lowered our risk to the weekend and the potential of a rollover, which is not happening, at least yet this morning. It is certainly possible. Remember that whipsaw price action that we've had here on these gap up openings. And just as a quick reminder, gap up and immediately drive down. And you want to be really careful of those chasing in first thing in the morning. So here we had our gap up and pull back and that whippy price action that's occurred right after the open, and there's no reason to have to jump into that. Another gap up and whip back down for the morning, gap up and whip back down right at the open. So it's fairly common. It's not unusual, and we'll have to keep an eye on that. So don't chase in is what I'm suggesting. Is give the market a little bit of time to digest this market pop and decide what it's going to do, and then start looking for new positions for your trades. Now this morning I'm going to probably be waiting 15 to 30 minutes or so before I really start looking at charts for new potential entries. We're light in our accounts, and I'm comfortable being light in our accounts right now, and because we're so deep into this rally, we have to expect at some point in time it will pull back. However, I don't want to assume that the market can't just keep going up. I mean, we could go in, anything is possible here. We're kind of almost in new territory here with such a bullish run and so much going on. We want to stay with the market. So I'm going to give it 15 to 30 minutes before I really start looking for new long trades in the market, and I will be looking for low risk entry positions when I do that. Let's take a look at SPY. SPY also very, very strong on Friday, just breaking out new record highs. Trend is good. All is there. In fact, I would say the SPY is in a much better position because it's somewhat rested here and it moved back over toward this trend. Notice the trend here is not near as steep as it is in the diamonds. The diamonds trend is very, very steep, almost reaching that parabolic appearance here, where the SPY seems much more controlled and could easily help the rest of the market continue moving up because it actually did take a bit of a rest. The Qs also took a rest and have not been able to actually break out and make new highs, and that is a little bit of a concern. And the reason I say that is because when the overall market is so strong and we see something like this and we cannot make a new high here, any weakness that shows up in the market could easily turn this into a failed new high. So we want to watch that carefully. The Qs, they're not in a bad position. I don't want to suggest bearishness here. We just have to recognize what we see in the chart, that while the other indexes are showing tremendous strength, diamonds in the SPY, Qs are lagging behind here, and that may create just a little bit of a problem. Nothing of major concern to worry about. You can see we're getting a tiny slight gap up this morning on the Qs. So something to just keep an eye on. IWM has really not participated with the overall market. It's just been kind of sliding along here, really happy and content to kind of go sideways. And there's nothing wrong with that. It's actually healthy for the market to rest. If this actually breaks through and starts moving higher, IWM may actually be one of the indexes to look for new trades or watch for an entry right into IWM, because it has a little bit of catching up to do. So keep an eye on that IWM chart. Let's take a quick look at the VIX. And you see the VIX dipped hard on Friday. Dipped down here, came really close to these historic lows in the VIX. And if you take a close look at it, you know, this is what I call the danger zone down here. And I want you to kind of, I'm going to go to a little bit longer chart. This is a 3-day chart, only to show you this downtrend. And this downtrend has been unbelievably stable. Considering this is the fear index, unbelievably stable. And you can see as we continue to shift down this line, we're building a really tight wedge pattern here and a massive wedge pattern, which would suggest that sometime in the future, we could actually see a rise in volatility. So keep an eye on this. And we all know that when volatility shifts or changes, it shifts quickly. And we could easily, well, you can see the big swings here. This was just that Thursday gap down, how quickly the volatility spiked and then dropped right back off. So it can shift really fast. Just remember, if we start getting up here and holding these support levels, there would be a concern to pay attention to. So just be aware that when a shift happens, it usually happens very quickly. Real quick, I want to take a look at T2122. T2122 is a 4-week new high, new low ratio. And as you can see, we're not up here in this super heights area. So we do have the potential that we can move up more. That little bit of pullback helped us a lot. But we are up here in that reversal zone where we have to pay attention to, you know, the overall market influences if we start to slip or see some selling. And it just really wouldn't be out of question to see some profit taking. So pay attention to that. And as we move back up here into this zone, just watch it closely. We could see that starting to shift and move down toward that lower side. So, and a good healthy, you know, correction or a consolidation would actually be good for the market because it sets a new platform. It gives us a place to work from. So don't fear a pullback or a consolidation, because those are actually usually really bullish signals in the market. If a market doesn't want to sell off and it just goes sideways, that's bullish. No one wants to get out, and we could see new highs move off of that new platform that's been established. Okay. Hey, really quickly, let's take a look. Let's go back here, take a look at the old diamonds again, and throw over the economic calendar. Now, the economic calendar is full this week with big reports. But today we start off with really nothing. So there's not much here to worry about. In fact, I mentioned this in the morning note, but to be honest, there's really chances of this moving the market are slim and none. And as you can see, the rest of the week, we have some big, heavy-hitting reports. Anything with that red dot is a heavy report and has the potential of moving the market. So we finished the week up here with the big GDP report. So there's a lot of data in here that can move us around this week. And that corresponds with a big earnings season. Now, I can't show this to you, but we have a huge week with more than 1,000 companies expected to report this week. So, we have to expect a little bit of volatility. We could see big gap up mornings or big gap down mornings. Swings from being positive in the morning, in the evening at the close, to being bearish in the morning. So this can be a very challenging time for new traders. My suggestion is to be very, very careful in your planning on your trading, and always be aware that if the stock has moved quickly in your direction, it's a good idea during time periods like this to scale out of the trade. And what I mean by that is taking some of those profits, reducing the pressure on the trade by going to the bank. You don't have to take the entire trade off, but taking partial profits on the way up relieves a lot of pressure on these whippy type markets that we could be seeing, or we could go into in this big earnings season. All right, everyone. Hey, if this is the first time you've seen this information, I do turn this out every single day that the market is open. It's available to anyone. I do it free. It's part of my market preparation, and I just happen to share it. If for any reason you see it's worthy to pass it along, please do so. It's free to pass it along to anyone that you would like. I will be posting this on Facebook, and so if you can do me a favor and click that thumbs up button, I also post it on my YouTube channel. So give me that thumbs up button, and I really appreciate you subscribing so that you can get this information, or following me on Facebook, so that you can get this information as soon as I post it in the morning. Everyone, take care. Have a great day. I wish you great profits, and I will talk to you all very soon.